As stocks hit session lows here, but effectively a fourth straight day where we've seen a rejiggering of positions. Jordan, what do you make of this? Is this just sort of a typical rotation, or are we going to see a more meaningful and I guess a more sustained sell-off?
I think some of this is a bit of a rotation. Right now, I think the markets are getting a little bit ahead of themselves in the expectation for rate cuts. You've already got rate markets anticipating about 63 basis points worth of rate reductions for the balance of the year. That's about 2.5 rate cuts, and the Fed is still leaning into the idea that they probably can start cutting rates in September and likely will go again in December. So you're seeing those rate-sensitive parts of the market continue to rally. Yeah, I tend to lean a little bit more into kind of the narrative of equal weight S&P outperforming the market cap weight over the small cap rally relative to the NASDAQ 100. I think, again, we were talked a long time about small caps needing some rate reprieve, and I think they're getting a little bit ahead of themselves. When we look at the bigger names, the bigger companies, that earnings rebound is expected to materialize over the back half of the year. So I think kind of continue to play in the large cap space and maybe fade this rotation into small caps a bit.
Particularly with the earnings season kicking off and now getting into that phase of the earnings season where we do get those big cap names, those big tech names here, Jordan, are expectations, in your view, relatively in line with where you think they should be, or are they too high or too low?
Well, it's interesting because the analysts' expectations have continued to move higher, right? And it's not about whether tech earnings are going to be good. It's about whether tech earnings are going to be good enough. And I think that's some of the challenge that we're seeing now where, again, the bar continues to get set higher and higher. Now, over the last couple of quarters, the tech companies have been able to usurp those expectations. But I think it becomes a little bit more challenging. And so I think you're seeing, again, as we talked about, a bit of that rotation and perhaps maybe taking some of the chips off of the table of the big winners and dispersing it to some of the more unloved and underperformers across the rest of the market.
So in looking at what's happening today, for instance, and this tech rout that has been going on for a while, TSMC, for instance, gave a fairly positive update, yet it hasn't helped sentiment for that company or for its peers. What do you think is the bigger driver here behind the tech rout? Is it fallout from geopolitics and this possible White House action against chip exports, or is it other sectors just simply look more attractive?
I think it's certainly political pressure, right? Sort of the additional regulatory burden that could be put on chip exports or imports coming into the U.S. economy. Certainly some risk there. We also have to recognize that these stocks have come a long way pretty quickly. And I think there's still this sort of excitement, which I think is warranted. But I think, folks are kind of looking at how far things have come, continue to look at valuations, which the big names continue to pressure valuations in an environment where the Fed is going to be very gradual in rate reductions and is certainly not going to get rates back down to zero. I think the valuation argument becomes a little bit more challenging. So I think those are a couple of reasons why sort of tech may be losing a little bit of steam here. But as I mentioned, we still like tech in the long run.
Got it. The FOMC, of course, meets July 31st. There's been talk more and more that the Fed doesn't have a reason not to move in July. Whether it moves in July or it moves later on in September, do you see that providing a lift to some of these mega cap tech names?
Well, if they move in July, I do think this does provide a bit of a lift because that would perhaps lead into maybe 3 rate cuts this year, July, September, and maybe December, and that could provide a bit of a boost to tech. I think if our base case though is September. We think they'd go in September, then again in December. The big debate, right, is again when we look at earnings and particularly earnings for next year in an environment which we're seeing inflation come down, is roughly 14% earnings per share growth for next year actually achievable? And I think that's up for some debate. And again, as you talked about, these names have come a long way, and I think investors are kind of spreading the love to other parts of the market right now.